All right, welcome back for another deep dive.
Yes, welcome back.
Today, we're diving into the world of cryptocurrency trading.
Ooh, exciting stuff.
We've got this explainer article here that focuses on CFDs, contracts for difference.
Yeah,
By the end of this, you'll know how crypto trading actually works.
absolutely. Buying and selling coins and using CFDs, we'll cover it all.
So, to kick things off, what cryptocurrency trading?
Well, you've actually got two main ways to trade crypto.
Okay.
You can buy and sell the coins themselves, Bitcoin, Ether, all those,
Right.
directly on an exchange. That means you actually own the digital asset, much like owning a stock.
Like I'm holding those coins in my digital wallet ready to trade whenever I want.
Exactly.
But this article also talks about CFDs,
Right.
and that just seems like a whole different ballgame.
Yeah, it is. With a CFD, you're not actually buying the cryptocurrency.
Hmm.
You're making a bet on whether the price of that cryptocurrency will go up or down. So you're speculating on the price movements
Yeah.
without actually owning any coins.
Okay, so if I think Bitcoin is about to skyrocket, I would go long on a Bitcoin CFD.
Exactly. You got it. Going long means you're betting on the price going up.
Okay.
And if you think Bitcoin is headed for a crash, you'd go short, betting on the price to fall.
Interesting. And this is where it gets kind of confusing for me, this whole leverage thing.
Right.
The article mentions leverage. It can really boost your profits,
Mm-hmm.
but also your losses.
Yes.
How does that actually work?
Think of leverage as a multiplier. Okay, let's say you want to trade $1,000 worth of Bitcoin,
Okay.
but you only have $100 to put down. With leverage, a broker can lend you the rest.
Oh, interesting.
So you can control a much larger position with a smaller initial investment.
So if Bitcoin goes up 10%, I'm making 10% on the whole, the $1,000, not just my $100.
Exactly. But the flip side is if Bitcoin goes down by 10%, you're losing 10% on that $1,000, not just your initial $100.
I see. High risk, high reward.
Exactly. Leverage amplifies both. Definitely not for the faint of heart.
So CFDs offer a way to trade on the price movements without owning the coins. And leverage can really magnify the gains or losses.
Yes.
But what about the crypto markets themselves? This article keeps mentioning decentralized. What does that even mean?
It's a big difference from, traditional financial systems.
Hmm.
Decentralized means there's no single authority calling the shots. No government, no central bank. Cryptocurrencies run on a network of computers all over the world.
So if there's no one in charge, how do we know it's secure? How do we trust it?
That's where blockchain comes in. Think of it as a giant shared ledger that records every single transaction. It's like imagine a Google Doc that everyone can see,
Okay.
but no one can change the edit history.
Right.
That's kind of what blockchain is like. It uses cryptography, basically advanced math, to make it incredibly secure, virtually impossible to tamper with.
So every Bitcoin transaction is recorded on this blockchain. And it's practically impossible to cheat the system.
You got it. And it's maintained by a network of computers all over the world. They're constantly verifying transactions and adding new blocks of data to the chain. It's called mining.
Mining,
Yeah.
like digging for gold. How does that apply to digital currency?
Yeah, kind of a strange term, but it's all about securing the blockchain, verifying transactions. Miners use their computers to solve complex math problems, and the first to solve it gets to add the next block of transactions. They're rewarded with newly created cryptocurrencies.
So mining is what keeps the whole system running and secure.
Exactly. It's what prevents anyone from manipulating transactions or double spending coins.
Fascinating. Okay, so how are crypto prices determined? I mean, in the stock market, there are companies' earnings reports.
Right.
But with crypto, there's no central authority setting prices, right? How does it work?
You're right. There's no central bank setting interest rates.
Right.
Crypto prices are determined by supply and demand, but with some unique twists.
Okay, let's break that down. What influences the supply of cryptocurrency?
Well, one major factor is the total number of coins that will ever exist.
Okay.
Some, like Bitcoin, have a fixed supply, 21 million. Others have a more flexible supply, new coins created through mining.
I see.
Then there's the rate at which those new coins are released. And believe it or not, sometimes people lose their digital wallets or forget passwords, effectively taking those coins out of circulation forever.
Wow, so a lost password can actually affect the supply. That's crazy. What about demand? What makes people want to buy these digital assets?
Well, market capitalization plays a big role. This is the total value of all the coins of a particular cryptocurrency.
So a high market cap means people believe in it and are willing to pay more for it.
Exactly. And of course, media coverage and public perception. Hype can send prices soaring. Fear can cause them to plummet.
It's definitely a roller coaster.
Yeah.
So the supply and demand of cryptocurrency is affected by a whole bunch of things.
It is, from the total number of coins to media hype to even lost passwords.
Wow. Okay, so we've laid some groundwork. We know what cryptocurrency is, how blockchain works, what mining is,
Yes.
and what drives those crazy price swings. Now let's get back to CFDs.
Okay.
Let's dive into the mechanics of how you actually trade them.
Sounds good. One thing that makes CFDs a bit easier to understand is that prices are quoted in familiar currencies like US dollars.
Okay.
You don't need to think in Bitcoin fractions.
That's a relief. But what about this spread the article mentions? What is that?
The spread is the difference between the buy price and the sell price. Kind of like a commission that the broker takes for the trade.
So the cost of doing business.
Exactly.
Okay. And lots. What are lots?
Lots are standardized trading units in the crypto market. Since prices can be so volatile, lots are often quite small,
Okay.
representing a fraction of a Bitcoin or other coin. This makes trading more accessible for people who don't have tons of money to invest.
So instead of buying a whole Bitcoin, I can buy a smaller lot, which is a fraction of a Bitcoin. Okay, now, to make sure I understand, leverage lets me control a much larger position with less money up front. But it also amplifies the profits and losses.
Right.
And margin is the initial deposit I put down to secure that leverage position.
You got it. But remember, high leverage is risky, especially with volatile assets like cryptocurrencies.
Got it. High reward, high risk. I definitely need to do more research on leverage before I jump in. The article also talks about pips. What are those, and how do they factor into trading?
Pips are simply a way to measure the smallest possible price change in a cryptocurrency. Think of them like cents for dollars, but for crypto.
Okay.
They're crucial for calculating profits and losses, especially with leverage.
So if Bitcoin goes up 5 pips, that means the price is increased by a tiny amount.
Exactly.
And knowing how much each pip is worth helps me figure out how much I've made or lost.
Precisely. Understanding pips is key to tracking your performance and making informed decisions.
This is fantastic. We've really broken down CFDs. I get how they work, the role of spreads, lots, leverage, and pips.
Great. We've covered a lot, but there's always more to explore.
Absolutely. The article goes beyond the basics, talking about digital currency and cryptocurrency.
Right.
Are those not the same thing?
It's a common misconception. The key difference is decentralization.
Okay.
Cryptocurrencies, like we've been discussing, operate on a decentralized network, free from any central control. Digital currencies are typically issued and controlled by a central authority, like a government.
So a government could create a digital version of their currency, but it wouldn't be a cryptocurrency because it wouldn't be decentralized.
Exactly. It would be a central bank digital currency, or CBDC.
Right.
Digital, but still controlled.
Ah, that's a key distinction. It's not just about being digital.
Right.
It's about who controls it.
Exactly.
Okay, that makes a lot of sense. Speaking of control, what about these crypto wallets? Do I need one if I'm trading CFDs?
You don't. Wallets are important for storing cryptocurrencies.
Okay.
But with CFDs, you're not actually buying or holding any cryptocurrency. You're just speculating on price movements. No need to worry about wallets.
Okay, that simplifies things.
Yeah.
But for people who are buying and selling actual cryptocurrencies, what kind of wallets are there?
There's a whole range. Desktop, mobile, online, hardware, even paper wallets. They all have their pros and cons in terms of security and convenience.
Wow, so many choices. Okay, let's talk about one of the biggest questions surrounding crypto. Is it actually real money?
Yes, that's the million-dollar question. And there's no easy answer.
So some people think it's the future of money, while others just see it as a speculative asset.
Exactly. Those who believe in crypto as real money point to its decentralized nature, its potential to disrupt traditional systems,
Right.
and the growing number of businesses accepting it. But skeptics focus on the volatility, the lack of widespread adoption, and the potential for scams.
So there are valid points on both sides. It'll be interesting to see how it all plays out. Okay, last question. The article mentions over 2,000 cryptocurrencies.
Right.
Are they all created equal?
Definitely not. Most of them have very little value. Only a handful have achieved significant market capitalization.
So which ones should people pay attention to? Is it all about Bitcoin?
Bitcoin is still king, with the largest market cap by far. But there are other major players. Ether, the native token of the Ethereum network, known for its smart contracts.
Ethereum. I've heard of that. It's not just a currency, it's like a platform.
You got it. Then there's Ripple, focused on cross-border payments. Bitcoin Cash and Litecoin are also worth mentioning.
Wow, it's a whole ecosystem of digital currencies. This has been an incredible deep dive.
It has.
We've covered so much, from the basics to the complexities of trading to the debate about whether crypto is real money. But before we move on to part 2, I have a question for you to ponder.
Okay.
Given what we've learned about the volatile and decentralized nature of cryptocurrencies, do you think they'll eventually become a mainstream form of money? Or will they remain a speculative asset? Think it over. We'll pick up the discussion in part 2.
Welcome back to our deep dive on cryptocurrency trading. I hope you had a chance to think about that question we left you with. Will crypto become mainstream money or stay a speculative asset?
It's a tough one. Lots to think about there. But before we get too deep into what ifs, I want to circle back to something you mentioned earlier, Ethereum, and its smart contracts.
Right.
It all sounded pretty futuristic. Can you break that down a bit more for me?
Sure. Smart contracts are basically self-executing contracts written in code and stored on the blockchain. Think of them like digital agreements that automatically enforce the terms.
So no lawyers or stacks of paperwork. The code handles everything.
Exactly. Because the code is on the blockchain, it's transparent and unchangeable, so no one can break their end of the deal. It removes the need for trust because the code guarantees everyone follows through.
Okay, I'm starting to see the potential here, but I'm having trouble picturing it in real life. Got any examples?
Let's say you're buying a house.
Okay.
Traditionally, that's lawyers, real estate agents, banks, piles of paperwork. With smart contracts, the whole thing could be automated.
So the contract would verify I have the funds, the seller owns the property, all those legal details.
Exactly. And once all the conditions are met, the ownership is automatically transferred to you. The funds are released to the seller, all simultaneously and securely on the blockchain.
No more waiting weeks for paperwork or worrying about someone backing out.
Right.
This could revolutionize a lot more than just real estate.
Absolutely. The possibilities are huge. Supply chain management, voting systems, insurance claims, healthcare records, anything involving agreements and transactions.
It's amazing to think we're just scratching the surface here. But let's not forget the other side of the coin. The risks, the challenges.
Right.
We've talked about the potential rewards, but what are some of the downsides to all this?
Well, volatility is a big one. Crypto prices can swing wildly, so it's a risky investment, especially for those who aren't comfortable with that.
Yeah, I've seen those headlines about Bitcoin dropping thousands of dollars in a day.
Exactly. And those swings can be caused by anything: speculation, market sentiment, regulatory news, even technological advancements. It's a market that demands careful thought and understanding of the risks.
Definitely not for the faint of heart. So what about security? Are cryptocurrencies and the blockchain inherently safe, or are there vulnerabilities?
While the blockchain itself is incredibly secure, there are other points of vulnerability.
Yeah.
Exchanges, for example, where crypto is bought and sold, have been hacked in the past.
People have lost their entire savings because of that, haven't they?
It's a risk, and it highlights why you need to choose reputable exchanges with strong security. You want multiple layers of protection for your digital assets.
Like choosing a bank, go with one that has a good track record and good security protocols.
What about individual wallets? Are those hackable too?
They can be, especially if you're not careful. Losing your private keys, which are basically your wallet passwords, or falling for phishing scams, can lead to losing your crypto. That's why choosing the right wallet for your needs and protecting your information is crucial. Security is paramount in the crypto world. It sounds like a lot to think about before diving in. So what are some of the other challenges facing cryptocurrency?
Regulation is a big one.
Well,
Crypto is still largely unregulated, which creates uncertainty for everyone and can keep bigger investors away.
so governments are still figuring out what to do with this new technology.
That's right. The lack of clear regulation makes it tough for businesses to operate and increases the potential for fraud.
It seems like everyone would benefit from some clear guidelines.
Hmm.
Businesses, investors, even governments.
I think so. Regulation can provide clarity, stability, consumer protection. All things you need for a market to grow, especially one as new and innovative as crypto. Another challenge we need to address is scalability. Some blockchains, like Bitcoin's, have a limited capacity for how many transactions they can process per second.
So as crypto gets more popular and there are more transactions, the networks could get overloaded.
Exactly. It could slow things down significantly. That's a bottleneck that needs to be fixed if crypto is ever going to be a mainstream form of payment.
I see your point.
Mm-hmm.
Waiting hours for a transaction to go through isn't going to work.
No, it's not. But there is good news. There are some very smart people working hard to overcome these challenges. New blockchain technologies are being developed that are faster, more scalable, and more energy efficient.
So there's hope.
Absolutely. These innovations could unlock the true power of crypto and make it accessible to everyone.
That's exciting to hear. But before we wrap up this part, I want to touch on something. We've talked a lot about Bitcoin and Ethereum, but there are so many other cryptocurrencies out there.
Thousands of them.
Are they worth exploring, or should we stick to the big names?
It's a great question. The crypto world is vast and always expanding. Bitcoin and Ethereum are the most established, but there are many other projects out there with unique features and potential.
So how do we sort through all of that? How do we know what's worth our time?
Research and due diligence are key. You need to look beyond the hype and understand the underlying technology, the team, the use cases, the market dynamics.
So don't just follow the hype. Do your homework.
Exactly. Don't blindly follow the crowd or invest based on rumors. Take the time to learn about the different projects, their goals, their potential, and their risks.
So Bitcoin and Ethereum are the big players, but it's worth looking at other projects with a critical eye.
Precisely. The crypto market is full of opportunities, but also scams and risky ventures. Do your research, understand the technology, and never invest more than you can afford to lose.
This has been an amazing look into the world of crypto.
It has.
We've gone from the basics to blockchain to the ins and outs of trading. I feel like I'm starting to understand this complex world.
It's a revolutionary technology, and we're still in the early stages. It's an exciting time to be involved, but you have to be cautious and always be willing to learn.
Now, before we move on to the final part of our deep dive, where we'll look at some practical tools and strategies for navigating the crypto market, I want to leave you with another question to think about. Given everything we've learned about the potential impact of cryptocurrencies and blockchains, what do you think the future holds for this disruptive force? Will it change the way we interact with money, technology, and even society itself? Think about that. We'll pick up the discussion in part 3. Welcome back to our final deep dive into crypto. I'm really looking forward to this. I hope you've had some time to think about that last question.
Yeah, me too. It's a big one.
This whole idea of crypto changing everything from finance to online interactions, it's kind of mind-blowing, isn't it?
It is. It really is. It's one of the most fascinating technologies out there with so much potential. But let's get back down to earth for a minute.
Yeah.
We've learned what crypto is, how it works, what drives its value. Now let's talk about how you actually navigate trading it.
Yeah, that's the big question. I feel like I understand the ideas, but putting them into action seems like a whole other challenge.
You're right. Knowledge is key here. Don't jump into trading without understanding the risks, the types of cryptocurrencies, and how the markets work.
We've covered a lot of that, but where can someone actually learn the ropes? Online courses, books, mentors.
All of the above. There are so many resources, online websites, blogs, even platforms specifically for crypto books
Yeah.
can give you a more in-depth, structured approach. And of course, talking to experienced traders or finding a mentor can give you insights you won't find anywhere else.
So find what works for you and really commit to learning this stuff. But once you've got that knowledge, how do you choose a platform to trade on?
There are a lot of options,
Mhm.
and it's so important to choose one that fits your needs and your risk tolerance. Think about security fees, the user interface, the cryptocurrencies available, and the quality of customer support.
But,
Do your research, read reviews, compare different platforms before you make a decision.
so it's kind of like choosing a bank.
Yeah.
You want one you can trust, and that meets your needs.
Okay.
So I got the knowledge, I've picked my platform, I'm ready to trade right.
Well, hold on. There are a few things to keep in mind, especially if you're new to this. First, start small.
Okay.
Don't invest more than you can afford to lose, especially when you're just starting out. Remember, crypto is volatile. There's always a risk.
That's a good point.
Yeah.
It's easy to get caught up in the hype and think you'll get rich quick.
Right. It's important to be realistic and manage your expectations.
Okay, so start small. What else?
Diversify your portfolio. Don't put all your eggs in one basket.
Okay.
Spread your investments across multiple cryptocurrencies. It helps reduce your risk.
So even if I'm all in on Bitcoin, I shouldn't put everything I have into it.
It's generally not a good idea to focus on just one business. Diversification is about more than just the number of currencies you hold, though. It's also about the types of projects you invest in. Look for projects with different uses, different technologies, and different teams behind them.
That makes sense. Spread the risk and don't put all your faith in one project. Got it.
Mm.
What other tips do you have for navigating the crypto world?
One of the most important things is emotional discipline. Don't let fear or greed control your decisions. Stick to your plan. Manage your risk. Avoid making impulsive moves just because the market is fluctuating.
That sounds hard, especially when you see those prices going up and down all the time.
It can be. That's why it's so important to have a plan and rules for yourself. It helps you take the emotion out of it and make decisions based on logic, not your feelings.
So a cool head and a solid plan.
Mm-hmm.
Okay, what about timing? How do you know when to buy and sell?
That's where technical analysis and fundamental analysis come in. Technical analysis is all about looking at price charts, finding patterns, and using indicators to try to figure out where the price might go next.
So you're looking at the history of the price to see if you can spot clues about the future.
Exactly. Technical analysts use all sorts of tools, moving averages, trend lines, oscillators, things like that to find potential buying and selling opportunities.
That sounds complicated. Is that only for experts?
It can be complex, but there are plenty of resources out there to help you learn the basics. A lot of trading platforms even have charting tools built in to make it easier. Even a basic understanding of technical analysis can help you get a feel for the market.
So it's worth learning.
Mm.
What about this fundamental analysis? How is that different?
Technical analysis is about charts and data. Fundamental analysis is about understanding the value of a cryptocurrency itself.
Okay.
You look at the technology, the team behind it, the rate of adoption, the potential of the market, all of that.
So you're not just looking at the price, you're trying to understand the value of the project.
Right. Fundamental analysts believe that a cryptocurrency's price should reflect its true value. They pump for projects with strong fundamentals that they think will go up in value over time.
It's like doing research on a company before you buy stock. You want to understand their business, how healthy they are, how they compare to the competition.
Exactly. And just like with stocks, fundamental analysis can help you find cryptocurrencies that might be undervalued and have the potential to grow a lot.
So technical analysis and fundamental analysis are both important. Is it best to use both?
A lot of successful traders do. They use both to make decisions. They might use technical analysis to figure out when to buy and sell, and they might use fundamental analysis to figure out which cryptocurrencies are worth investing in the first place.
It's about using the right tool at the right time and really trying to understand the market from different angles. This has been so helpful, but it's clear there's no one right way to trade crypto.
You're absolutely right. What works for one person might not work for another. It depends on how much risk you're comfortable with, how long you want to invest for, and what your goals are. You need to find a strategy you're comfortable with and keep learning as you go.
This deep dive has been incredible. We've gone from the basics of crypto to blockchain to trading strategies. I feel like I have a much better grasp on this world now.
It's been great talking about it with you. The world of crypto is full of opportunities and challenges, and it's changing all the time.
Yeah.
It's definitely a force to be reckoned with, and it has the potential to change everything.
Absolutely. As we wrap up this deep dive, I want to thank you all for joining us on this journey into the world of cryptocurrency. Remember, knowledge is power in this space. Keep learning, keep exploring, and who knows, maybe you'll be the next big crypto success story.
Until next time, happy trading!